My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sometimes it feels like it's harder to own winners than losers. I don't know. See, if you own losers, they don't have any profit takers, so they don't go down. If you have winners, well, you know what? I mean, what can I say? Until today, I thought that the winners were going to stay higher. And that's my conclusion about a day where the Dow tumbled 533 points, S&P lost 0.78%, and the Nasdaq declined 0.70%, with the companies that have the best fundamentals getting hammered once again. And I have to tell you candidly, I did not expect that to happen today. See, the difficulty with owning winners right now, the reason I always urge you to take some profits on your gains while you have them, is that you get weeks like this one, where the old winners get obliterated. And if you own too many of them, you might want to give up on the whole asset class. So tonight, I want to explain to you why you need to understand the bear cases for the stocks that you own, for the most beloved stocks. Otherwise, you'll never know what you're up against. Yeah, this year, the winners had been, until this week, the Magnificent Seven plus Eli Lilly, which after years of making money for you, are now crushing your portfolio. So we got to dig in to see if anything has really changed. Or is this just one of those periodic sell-offs? Sell. That could actually be an opportunity if you have some sideline cash, and no one's thinking like that. First issue, when you get this kind of rotation, you never know whether these stocks are selling off because there's something wrong or because they're up huge and people want to take profits. That's why I say if you own losers, you don't have to worry, there's no profits. But winners, people find ways to take profits. It is so hard right now. At least you know why the losers are going down. It's because they aren't any good. The winners, you have to say, what the heck's going on? I thought it was a good company. But when a big winner sells off, you have to ask yourself if the stocks got too rich. Did it go too high? Was it always, maybe it was just momentum. Worse, maybe something shifted, something changed, and you're going to be left holding the bag for a long time, so why not sell now? From what I can tell you, nothing has changed with the stocks that we're going to talk about tonight. But it is true that the stocks are a heck of a lot more expensive than they were 1 year ago, even as their earnings have been growing at a nice clip. So they've gotten too expensive versus where they are. That's a big issue. Second issue, as a winning stock goes down and the pain doesn't stop at, say, 7 to 10%, which is the typical garden variety decline, you get a second group of traders who follow the charts. They decide to sell because their stocks look broken on the charts. Once again, people take up the broken stock banner. You know there's no stopping a decline when that happens. Yes, the charts are that important, at least in the short term to medium term. And yeah, just like the stocks seem expensive, the charts are broken. Number three, there are always people who see these formerly hot stocks go down. They say, they were always just in a bubble anyway, so why not short them? Maybe short them through an ETF so no individual can really crush you. But they figure the easy money's already made, and you know what? Let's sell, and short. Because when the short sellers arrive, they can do a ton of damage, and they do their best to not let the stocks lift anytime they seem to rally intraday, which I saw 3 different times today. 3 different times these momentum stocks tried to rally, and 3 different times I saw shorting. Right now, these choke points are coalescing all at once around the mega caps, and that's before we even get to the bear cases we're going to go over right now. So why don't we do that? Let's go through the individual reasons why I think people are selling a Magnificent Seven and Eli Lilly. We're going to start with Amazon. Here's a name that's still up more than 20% for the year, outperforming most stocks. But what's the matter here? It sells at 40 times earnings, and that's unusually high, even for Amazon. It's not a huge beneficiary from lower interest rates. So people are fleeing from Amazon, and they're buying cyclical plays, like a D.R. Horton, the big home builder that could see an earnings explosion as rates come down. And that's how Horton could rally 10% today on just an okay quarter. And great companies like Amazon are getting hit hard. Alphabet, real tough one. It's cheap. The ad market's fantastic. YouTube's killing it. But perhaps people think, wait a second, I'm using their AI platform as well as Microsoft's, so are the regular search numbers going down? It's a legitimate question. I know I use search much less. I go to ChatGPT. Many other people doing the same thing. So what happens? People want to sell first and get questions answered later about whether search is being hurt by AI. Apple. People were in there selling at 165 in April because they thought that the new iPhone wouldn't resonate. When the Worldwide Developers Conference came, we found out about all these new features, including built-in AI, getting it for free. Next iPhone iteration going to be terrific. Stock comes roaring back. But in the 230s, where Apple peaked earlier this week, hasn't run too much. I think that's what's alien, alongside the possibility of some anti-China rhetoric from Donald J. Trump when he speaks at the convention tonight. They have big China business. Meta seems solid, but it's a little unnerving to own shares in a company that the presidential frontrunner seems to have it in for. Trump, just like Meta. Look, even though Trump's rapidly anti-China, he's willing to support TikTok, a Chinese company, as a counterbalance to Mark Zuckerberg, the CEO of Meta. The stock was subdued for most of the day before we learned that Meta might want to buy a stake in Ray-Ban maker EssilorLuxottica, the maker of Meta's AI sunglasses product, which apparently can't even get close to meeting demand. But then, well, that's probably not enough to offset the president or a presidential candidate, is it? How about Microsoft? This morning, David Faber was talking about how all the data center spending may turn out to be a big waste of money. Of the companies that are building huge data centers, could Microsoft be spending too much without a big return? I think Copilot, their AI platform, will be huge, but will be big enough to justify their investment. Given that the stock sells for 37 times earnings, there's not much room for failure. So why not? 6, if you pick any 20-year period for any stock, NVIDIA's had the biggest gains over the past 2 decades, with a 33.38% annual return. And that's over a 100-year period. That's statistics from a draft of a paper by a fellow by the name of Hendrik Bessenbinder from Arizona State University. Bessenbinder. I brought it up this morning because I thought that was just an amazing calculator, amazing number. My colleague Faber smiled, laughed, and then reminded me that this is a what have you done for me lately business, so it doesn't matter. And this kind of sell-off, that's the prevailing attitude. That's why everyone wants out. Tesla. Okay, it just had an almost 100-point move in about a month based on absolutely nothing other than chatter about self-driving cars. The numbers aren't that great. That's ridiculous. Stock sells at a monster charisma per share number, but also an equally large price-to-earnings multiple, more than 100 times. 100 times earnings. So who would want to take profits with that? And Eli Lilly. The bear case is that Roche is developing their own GLP-1 weight loss drug in pill form, not an injection like Lilly's, and has very good efficacy. Well, wait a second. We talked about that in January. I mean, and we don't even know how long it'll take before it's approved by the FDA, if it's ever even been approved. But in this market, it causes a tailspin. I still like Lilly because these drugs are hard to mass produce, and they've got a huge lead on the competition. Something I reminded Investing Club members about yesterday, because it's a big position for the trust, didn't matter. The stock is for sale. So let me tell you where I come out on the Magnificent Seven plus Eli Lilly bear cases. Every one of these bear cases is for real. Just like most of the bearish arguments you've been hearing about these stocks for years now. At a certain point, though, real worries do get baked in. The market with itself is trying hard to bake these in. You can own losers and have no profit-taking, right? Winners have profit-taking. That's what's happening. Do I know when they'll bottom? Do I know when they're done? Usually when you ask that, you're staring at the bottom, but I felt yesterday was going to be the last day to sell off, and that was wrong. But if you ask me, the reason why these former winners are all going down now is because the shareholders are scared. They're frightened. They don't want to give up their gains, so they're getting out. Why don't I feel similarly inclined? Because bottom line, I think if you're willing to own them for the long haul and take some pain, you'll continue to win. You just need to get over the hump, a hump that periodically scares people out of this whole asset class. These are solid companies with real earnings and great balance sheets. But these moments of panic are usually where you need to be patient and even opportunistic, taking the sell-off as a chance to buy some great stocks while they're on the way down. Let's go to Robert in New York. Robert.
Jim, you couldn't have said that any better. I mean, what you just said that's exactly what you do. That's why I listen to you. That's what I do. I buy on the way down. But
you know, Robert, it is painful. And if you have losing stocks, you're not worried because you don't have no profit takers. But we've got huge profits to be taken on this. And that's what you and I are looking at right now.
That's exactly it, Jim. Jim, I want to talk about this stock. The other day I was at the country club. I wasn't having steak this time, okay? But I'm there with my buddies, and I'm at the country club because of all the winnings that you have made me very great recommendations.
Thank you.
Okay? So I'm sitting there, a lightning storm comes in, boom, power goes out. 2 minutes later, the power comes. I figure, I'm not going to get my food. Power comes back on, and I look at the waiter, and I go, he says, we have a generator. And I said, I knew the generator that he had. Because everywhere I go, I see the same name, And this company designs and manufactures power generation equipment serving residential, commercial, industrial. And by the way, the other day, they just received up to $200 million from the Department of Treasury to supply renewable power to Puerto Rico the other day. And they're doing this, and they're also in the EV charging stations right now.
They're doing everything. What's the stock? What's the stock?
The stock is Generex.
Generex. Well, man, Generex has been one of the. Hey, I got to tell you, Robert, that stock's like at an all-time high, and we don't. I mean, no, 52-week high. I'm sorry. I agree with you. I think it's a great stock, though. And we had them on. I love the story. When rates go down, that stock does even better, Robert. Now, let me have a. Where do we go? Are we going to we're going to Augusta, right? We're going to Augusta Country Club. We don't know when the Magnificent Seven will bottom, but I know that if you own them for the long term and be patient, you will continue to win. But that's a hard thing for people to have. Well, Mad Money tonight. Constellation Brands reported a strong quarter that sent the stock lower. But after climbing back, what should you make of the mixed action of the company behind Corona and Modelo? I'm going to check with the CEO. Then travel trust name Abbott Labs has been dogged by litigation concerns. And after the company reported this morning, I'm sharing if earnings changed anything in our thesis. And close viewers know we've been fans of Charles Schwab. So now that the stock has fallen after earnings, are investors getting an opportunity to buy? I'm checking in with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.